Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. An unusual key reversal up and second bullish white soldier yesterday, following on from the previous session's immediate countering bullish long harami. It was the highest close and second highest high since July 2022. The market opened just over the congestion from August 2014 between 101.55 up to the September 2014 high at 103.34, containing within it the extension to the bright pink neckline, currently 103.12, of the March-April 2024 head and shoulders top, dipping below this congestion but not as far as the next support, which is the November 22 high at 99.61, before pushing higher. Now, over the next congestion at the August 2022 high at 105.49, and then through the stratified congestion, mainly made from 2014 at 106.79, 107.46, and between 108.27 and 108.62, breaking even higher over the congestion at 110.68, but stopping short of the dark blue neckline extension, which is currently at 113.89, of the July to November 2023 head and shoulders top, before dropping down to close at the congestion at 107.46. As you can imagine, some areas overhead are now sparse of congestions, and some have significant free and open areas. Now, so far today, a slightly higher open just under the congestion at 110.68 and a swift move higher through the dark blue neckline and up to test a very interesting area overhead between 119.19 to 120.03, containing not only last week's high at 119.50, but also the very, very interesting bright red middle time, which is currently at 120.03 of the big, very big, and I can't stress this enough, 2020 to 2025 bullish shift pitch hawk. I've spoken about this before, this one. This time it capped the rise seen there back on the 9th of March. Now, prices have pulled back from testing this significant 119.90 to 120.03 congestion, sitting just over the dark blue neckline. Spot gold. A bearish engulfing pattern and bearish long black Mariposa yesterday after the previous session's second indecisive consecutive pattern. This time it was an indecisive doji cross after the earlier session's indecisive spinning top pattern. Prices dropped from the open below the important and key 50% Fibonacci line for the whole late January action at 49.99. Then through various lesser Fibonacci lines as well as the next 50% Fibonacci line, the one for the late December 25 to late January 26 move at 49.31, plus down through the rising green short medium moving average currently at 49.39, finally closing just under the lesser Fibonacci line at 46.97. Now, I had previously repeatedly highlighted the break below the early February and mid-March small bull channel, which is currently 52.40 to 56.44, and this move lower gave us a primary target X in the 49.60 zone, a secondary harder to reach target X1 down in a 48.95, and a tertiary much harder to reach target X2 down in 47, down at 47.35. Well, targets X and X1 were reached yesterday. However, despite the bearish targets, the dominant longer term pattern and show running here has been the dark blue late December 25 to early February 26 bullish shift pitch hawk. The market a little above the dark blue, lower time below, currently at 45.97. But I am now starting to have some doubts about this pattern, though I do note the medium moving average, currently at 46.03, is reinforcing the dark blue lower time. But then again, if you were planning to break lower, it would be easier to expend energy against just one level rather than to ration it out for two separate levels. And that is something to consider. So far today, a push up through the push up through the lesser Fibonacci line at 48.58, but then a strong move lower, and now approaching the combination of the dark blue lower time and that mauve medium moving average, but seems to have stalled for the moment. Bitcoin, a second bearish black crow yesterday after the previous session's immediate countering bearish dark cloud cover pattern. The market continues its fall from the previous session's fall from the pierced, though still effective, dark blue upper bull channel line, currently at 75.314, of the key and overall pattern here, which is the dark blue early February to date bull channel, currently 65.708 to 75.314. Prices were capped this time by the congestion made up from the March 24 high and the April 25 low at 73.779 and 74.444 respectively. Then the lesser Fibonacci line at 72.023 and the interesting 50% Fibonacci line of the November 25 to October 25 move at November 22 to October 25 move at 17.929, piercing this latter one, but ending up closing just over it. Going back to the dark blue bear bull channel, this market or this pattern continues to raise the question as to whether this is a potential halfway hesitation for a much lower market or a potential basing action for higher prices. That's still an open question. Below we now have the bright red neckline, currently at 67.889 of the August 21 to January 22 head and shoulders top. The neckline saw the market rotating around it throughout most of February and into the middle of March. Finally, we still have in the bigger picture, just about hanging on, a very large October 25 to date bearish halfway hesitation. The primary and secondary targets for this pattern have already been achieved, leaving just the much harder to reach tertiary target X2 down in the 54,000 even zone. Now, I was on the verge of retiring this target unless, and I quote, unless we see some strong and distinctive moves lower very soon, end of quote. Well, we might very well be seeing the start of something now. It's time to once again to be aware of the 50% absolute Fibonacci line sitting below at 63.129. So far today, not much, with the market seemingly trapped more or less within the 73.779 to 74.444 congestion right now, but it's just sort of dipped below it as I've been speaking.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.